I'm Heather Osborne, Director of Wealth Planning at Baird.
And I'm Tim Steffen, Director of Advanced Planning.
We heard our colleagues at Strategas talk about financial markets, the economy, and fiscal policy for 2024. Now, let's turn our attention to some planning opportunities in wealth and tax planning. Tim, what are some of the things you're keeping an eye on for 2024?
It's been a relatively quiet year from a legislative standpoint, so there's not a lot of new things taking effect in 2024. And we expect that trend to continue throughout the year as much of the focus in Washington will be on the upcoming election. But that doesn't mean it's going to be a quiet year in 2024. For example, 2024 is the first year taxpayers can take advantage of a new law that allows them to roll 529 college savings accounts into a Roth IRA. And this opportunity is relatively limited, but it's something we'll be talking about quite a bit next year. Inflation continues to have an impact on our tax system, and much like we saw in 2023, many of our key tax numbers for 24 will be increasing substantially. This will mean more income tax at a lower tax rate, larger standard deductions, and an increase in the personal exemption for gift tax purposes up to $18,000. The third consecutive year we've seen an increase in this number. And we're still waiting for guidance from the IRS on how and when beneficiaries of inherited retirement accounts are required to withdraw funds from those accounts. But to be honest, the primary planning thing we'll be talking about this year is a series of changes that have been on our radar for many years and that are now beginning to become reality.
And you're, of course, referring to the Tax Cuts and Jobs Act, which was a large tax bill passed in 2017 with significant changes to our income and estate tax systems. Provisions from this are set to expire after 2025, and the window to plan around some of these changes is beginning to close.
That's exactly right. Of all the things that could change after 2025, the one that we're focusing the most on right now are potential changes to our estate tax system. In 2024, the lifetime estate tax exemption will increase to over $13.6 million per person. But in 2026, it could fall by more than half. Now, that's likely still enough for the vast majority of households in America to avoid the federal estate tax. But for married couples with net worth of more than $15 million, or a single person at half that, discussion should be happening now on how to plan for this exemption before it goes away. So Heather, as households begin thinking about how they want to take advantage of some of these planning opportunities, it probably makes sense to start with some of the fundamentals of good planning.
And this means updating things like your personal balance sheet. Not just your financial accounts, but also hard-to-value assets like real estate or small business or that collection you've been building up over the years. Understanding the value of these assets, how they're titled, and ultimately how they'll pass to the next generation is an important fundamental to any planning conversation. Reviewing your income is another important aspect of your fundamental planning. Looking for ways to mitigate future taxes or even making sure your retirement income will be lined up for when that day finally arrives. This extends even further into things like building your emergency savings and reviewing your insurance in case a financial or health crisis should arise. And let's not forget children and grandchildren heading off to college and any charitable causes that might be important to you.
Any sound financial planning strategy also includes being aware of outside forces that can influence a plan, and knowing when to react to them and when to ignore them. This will especially be true in 2024 with it being an election year. There will be a lot of noise from the presidential candidates and their policy proposals that can affect your retirement, estate, or tax plan. As we always say in these kinds of situations, be aware of what's being discussed, have a plan in place to react in case it does happen, but be careful not to front-run these changes. It can be tempting to react to a proposal that's out there, but it's easy to have buyer's regret when those changes don't happen exactly as you expected. Much like we tell our clients when it comes to managing their investments, you have to be careful about overreacting to the news.
And of course, remember there are those things that are in your control and those things that are out of your control. And focusing your time and energy on those things that are in your control will help you when those headwinds should arise. The best place to do this is to have a team of advisors to be able to support you. In particular, engage your Baird advisor. Each Baird advisor is backed by a team of experts in investment management, tax planning, and estate planning, just to name a few. And because we're an employee-owned firm, we can take a long-term approach to planning. We have multi-generational expertise in trust planning, legacy and family wealth, and business owner solutions.
So as we approach the end of 2023 and roll into 2024, use this opportunity to reflect back on your accomplishments of the last year and looking forward to the challenges and opportunities ahead of you. making sure you put yourself in the best position to react to whatever may come your way. We'd like to thank you for your continuing engagement at Baird for all your financial needs, and we look forward to working with you in the next year and beyond.
From all of us at Baird, we wish you a wonderful holiday season and a happy new year.